On this episode, we're joined by Ross McBride. Ross is the founder, president, and CEO of Globalvestment Capital Partners, a real estate, investment banking, and finance company. Ross and his team have helped thousands of global real estate investors buy, invest in, or sell income-producing real estate assets at scale. Whether institutional, family office, or high net worth, Ross's unique global footprint enables clients to connect with large investment opportunities and investors from all over the world. Welcome to the show, Ross.
Thanks for asking me to be on.
Yeah, absolutely. Well, if you don't mind, could you please introduce us to your unique Think Globally and Act Globally strategy that Globalvestment Capital Partners employs?
Sure. What we've seen evolve over the last 10, 20 years is real estate. The thinking on real estate or the paradigm of real estate has changed. And I'll tell you what I mean by that. It used to always be that the key about real estate was local, local, local. You had to be a very local player, active in a local market, and that was the key to success. And what we've seen in the last 20 years, that's changed a lot because markets have synchronized. And used to be primary markets like in the US, New York, Los Angeles might be different because of the West Coast, East Coast, or tertiary markets or asset classes. And we've seen it synchronize a lot. And now what we're seeing, sort of like the best real estate investors globally, the BlackRocks and the Brookfields and that sort of thing, have a global idea orientation where maybe a good time to buy in the US and sell in Brazil. It might be a good time to invest in the UK and sell in Japan. While in the old days, it might have been good to buy in the east side of the city and sell on the west side of the city, or buy on the East Coast and buy on the West Coast. And so I call it, for larger real estate investors, the world is one market, and that's very much our focus. So I don't have we don't think in terms of a US team or a UK team or a German team. I have one team. We deal with the whole world for large real estate investments. And that's very much what we see the world moving towards, especially with technology. Like, look, today, you're sitting in Phoenix, Arizona, I think, and I'm sitting in Madrid at a conference, and we're talking, and that's totally cool. Does that answer your question?
Yeah, no, that does. You're absolutely right. It does certainly feel like with the technology advances and as they continue to advance daily, that we really are much, much smaller of a world and much more able to be that global. So we're on the Ground Lease Show. Of course, I want to know, how do ground leases factor into this global perspective and the one world mentality?
Well, it's interesting. I see more and more, the sort of the duality of real estate investing is I want safety, security, and I want return. And, the key word always is risk-adjusted return. I want a highest return I can for the risk I'm taking, and diversification. Like if I own one asset in one market, I call that concentration risk. In fact, I have a client of mine, he builds office buildings in one market. And he owns one asset class, office buildings in one market. And I think he's got massive concentration risk. And he thinks he's smart because he's got specialization. And I disagree. Like what we're seeing in the geopolitical movement these days of, wars and currency and inflation, that it's diversification is the key to success. It's like same as look at banking. If you have all your money in one bank, like Silicon Valley Bank, this may not be smart. And I need to maybe be in 10 banks. And so we see the same thing with large family offices and institutions that we deal with. They're going diversification. So diversification is by currency and geopolitical risk. Like I want, 30% in the US, but I want, 5% in Florida and 5% in Texas and 5% in California. I don't want 100% US. I don't want 100% in Florida. And then, they break it down even further to that. They'll go like, okay, what's my asset classes? And I'm going like, okay, how much do I want to have in credit, like in mortgage lending? If I want to do some mortgage lending, how much do I want to have in retail shopping centers? How much do I want to have in multifamily assets? How much do I want to have in industrial? And what's very interesting, is there's certain markets that, a certain asset class is new or relatively unknown. And so I'll give an example of this. Student housing is a very developed asset class in the US, almost doesn't exist in Europe and the UK. It's all, sixplexes and fiveplexes. And just now, large 100, 200, 300 unit student housing is evolving in Europe. Well, that's a normal thing in the US. Vice versa. And so I have lots of clients that are now investing in student housing at scale in Europe and the UK because they see the opportunity that was in the US student housing 20 years ago. Vice versa, to your point on land leases. Like in a market we're very active in the UK, in London, land leases are extremely common. And in fact, the rule on most properties, in fact, whenever you go to sell a building in London, whether it's a 500 million pound hotel or a 6 million pound house, the question always is it on freehold land or is it on a land lease? And land leases are very common, whether they're 99-year lease or 199 or 9. In the US, the only market where land leases historically have been common is in New York. Now, what that means to me is very sophisticated markets learn that there's value in bifurcating or splitting the building from the land because the return on the building can be much higher than the return on the land because the safety and security. And like I have a client who's got a couple of $1 billion in land leases in the UK, and he goes, I used to have a big bond portfolio and I used to have a whole bunch of term deposits. And he says, the problem with that is, I have a 30-year bond or a 20-year, treasury bill or that sort of thing. I have a fixed return, but I get I have a piece of paper. And we used to think that T-bill piece of paper was really valuable. As the deficit goes up and the debt goes up, people are more and more concerned that piece of paper may not be worth much that it's written on. And as case in point, 100 years ago, Argentina was the richest country in the world, and its bonds are now not worth the paper they're written on. So things change. And, Ray Dalio writes a lot about this. And so the thing about land is buildings can come in vogue and out of vogue. Like offices 15 years ago were seen as the most stable asset class and institutional investors loved them. Today, offices are seen as the worst asset class and nobody wants them. But the land underneath maintains value. And so even people that are looking for bonds where in their risk returns, they're going I want really high levels of safety, bond level safety, but maybe a little higher return than a bond. Land is great. And the other thing about land leases that's interesting is unlike a bond where in 10 or 20 or 30 years, there's no inflation uptick, which often happens on land leases where, every 5 or 10 years, there's an inflation increase, which doesn't have with bonds. Two is at some point in time, 10, 20, 30, 40 years down the road, you can reset because you get the land back and you can release it at a much higher rate because the land's gone up in value, which doesn't happen on the $100,000 or $1 million you invested in the bond. You just get that 100,000 maximum $1 million back. Well, the land may have gone up to 2 million or 3 million, and now you get a much higher return on that lower cost base. Did that come out right?
Yeah, that's incredibly insightful. And so you're right. In the States, land leases aren't that popular, aren't that common knowledge.
I would say not popular. It's not common. You know what it is? It's a lack of knowledge.
Yeah. So that was going to be my question is from especially you have a large reach across even your investor client base, but are they already sophisticated enough or knowledgeable enough across your client base that they know about the land leases, or is it a game of educating them and really informing them of that opportunity? I 100% agree. I think it is just a lack of knowledge about it. But how do we spread the word?
I was going to say you and I were chatting. I said in New York City, you can buy a condo, rent an apartment, or buy a co-op. And, a co-op is a totally normal thing to buy in New York instead of buying a condominium, and banks lend on that sort of thing, because New York's a very sophisticated, very knowledgeable real estate market, and it has evolved farther along. And yet I go to a place like, pick a market that's not as sophisticated as New York. No offense to anybody, Dallas, Texas. There are no co-ops in Dallas, Texas yet.
Yeah.
There's land leases in New York. There's very few land leases in Dallas, Texas yet. And it's kind of it's like a sophistication of the market. The most sophisticated in real estate investors I know, which is another word for smartest, which is another word for successful, which usually is another word for richest. They see real estate 3 levels, and it's based on height. A guy told me this was really, he says, people just think of real estate as one thing. He says there's 3 things. There's the air rights above the building, which again is usually a scale market thing, buy the air rights above a building in New York, and then move those air rights to somewhere else where I can have higher density. So there's the air rights above it, value. I've seen churches sell their air rights and keep the church and build over top of it. Those sorts of things in some models in the United States. So there's the air rights, there's the building, whether it's 1 story or 30 stories, and there's the land. And there's 3 different things. Like a building wears out. A building, you have to, change the elevator. A building, you got to renew the electricals. The building, the fire code changes, and you got to do some sort of CapEx to reinvest. Whether it's multifamily or office or hotel, you got to reinvest to keep it alive and keep it good, sort of thing. And so there's a certain cost to that, and it could go out of fashion. Air right, interesting and have value in some places. The land, the great thing about land is you don't have to do anything. You don't have to renovate the land. The wiring doesn't go out of code for land. There's no CapEx budget on land, and so they can't all of a sudden change something on you and say, okay. It's one of those things that land leases. I was talking to a really successful family. It's been around for 500 years in the UK. And they mostly are in land leases because they go if you're thinking long-term capital preservation with an inflation hedge, they would argue land leases is the number one investment in the world.
That's I love the statement. I love the sentiment, because that's where we're attempting to, educate others and inform others. So globally, the next smartest markets are going to be where?
Well, this is, like you sit there and you go like, okay, when people start getting into things like, when you're the first person in, when you're a new investor, you get the best deals and the best returns. And then as the market becomes more, there's more volume, pricing gets worse. And so like, here's an example, like, in a very large land lease where everybody understands that market, like London, the returns are X. Someone investing in land leases in the US will get 2X or 3X comparatively, because it's a less known marketplace. And so, there's less competitors. So you'll have, like, I would suspect if an investor is going to make, 2% on a land lease in the UK, they might make 5% in the US. I don't know your numbers, Anessa, but like that kind of a difference or delta, I would suspect would exist, and maybe safer in some ways, because the U.S. population is still growing and all those sorts of things, which isn't true in some of the other markets I work in, like Germany, where land leases are also common.
Okay, perfect. Thank you for that. So tell me about then, as your clients especially become more familiar and your investors start to see the incredible value, in markets where ground leases or land leases are not common, what's the strategy? How do you employ even the thought process that, okay, in order to get there, we have to bifurcate. We have to look at an unconventional asset class and turn it into a land lease. I mean, what does that look like from you on your perspective, on your side?
Well, it's just it's funny. It's that whole thing, but it's just lack of education or knowledge. Like, an owner of a building not realizing that there's value in the air rights, an owner not realizing that there's value in, doing a land lease as a way of getting a lower capital cost and separating it from the building and stuff like that. Like, the example is, like, it's interesting. We're selling a hotel for a client of ours in the East Coast of the US right now that's on a land lease, because it's in a large city sophisticated market. And it's like a 99-year land lease. And it's interesting, like, it's a big asset. Smart investors don't really see much of a difference, interestingly enough. And yet there's been a value creation of splitting those two things apart. You follow me?
Yes. Yep.
And so it's a very interesting thing.
As we're attempting, right, to have this Ground Lease show to just continue to share that it actually could be a lot more common if we're thinking about it, we're learning about it, we're employing that. What are some key asset classes or unconventional asset classes, or what are, where could we say, hey, owner, it is nearly a slam dunk for you if, you're in this market or you have this type of property? Is there kind of a criteria for what makes a really great opportunity as the ground lease market grows? Well,
what people, the basics always are generally is, I got two things. You got, demographics, is the population growing? Is there job growth? Because, they want to know that in 30 years or 40 years or 50 years, because land leases are a long-term thing. Not that you couldn't trade it beforehand, but that's, that's sort of the idea. Is there still going to be some people living there and that sort of thing? So that's kind of a basic, I would see. They like to see a certain size of a city, I'm just thinking about one investor I know, like, he likes cities over 100,000 population for land leases. Like, that's his particular criteria. He thinks smaller towns won't be as oriented towards it or something like that. From an investment criteria perspective, there's often scale too. Like, again, the migration I see is people substituting land lease portfolios or investments for what they used to have for bond. Like, that's the substitution. It's higher return, safer, bond-like return. And so the investor that's coming into this, it's interesting, like some of the institutional investors I know, pension plan insurance, have massive land lease portfolios because they have long-term liabilities, and they think this is a smarter idea than having a 20, 30-year T-bill. And you know what, Anessa? I agree with it. I'd rather have a 30-year land lease under a building in Phoenix, where you are right now, whether it's hotel, even office building, multifamily, whatever, then I'd rather have a 30-year state bond with a piece of paper. Like I'm going to get a higher return. It's inflation protected. And at the end of it, I own a piece of land in a growing city that's probably gone up in 30 years 10 times in value versus the bond I'm hoping to get the money back from the state. right?
Yeah, you made that comment earlier before we started recording that the ground leases are like bonds, but better than bonds. So I hear you. I think that's really great. A very valuable comparison, right? And enable our listeners to.
It's risk-adjusted return, right? And so, extremely low risk with a higher return than comparable similar assets.
Yeah.
Right.
Yep. So tell me, do you have a recent ground lease acquisition that your investors participated in that might be interesting or was maybe outside of the norm or in a new market? Do you have an example you can give us?
Well, here's an example. So I have a client of mine that owns a portfolio of land leases in the UK, and they had a liquidity issue, and they also own a bunch of buildings. And it was interesting. They were able to sell the land leases easiest for the most amount of money because of the quality of the asset and the quality of the perceived cash flows, recession or no recession, inflation or no inflation. It was interesting. So when they needed cash, they found that was the easiest asset to sell that they had to take. They were able to get the best pricing on, even under challenging market, conditions. That came out right.
Yeah, what an opportunity that really amplifies or kind of focuses in on that these ground leases provide for our investors.
Totally.
What did I not ask you about ground leases in specific to either Globalvestment or the market that our listeners might benefit from?
Just, the only thing I just benefit from is this is such a common thing. Like, I remember we were working on a large land lease transaction in New York. It's one of these things where it's kind of like people sometimes wonder what's the secrets of really successful, families that have maintained their wealth for, generations. Like in London, there's a couple of families very famous, like the Grosvenor estate, the De Wilde estate. Like there's a bunch of families that have been essentially really rich for hundreds of years. And we're talking not 10 years, not 20 years, like hundreds of years. And all of them, it's land leases that is their main core of their holdings, which is an interesting correlation, isn't it, Anessa?
Yeah. That's an interesting thought, because I think traditionally we're not exposed to this asset class as a whole, especially here in the US. And then as we're growing, as our investors are growing, right? It's the secret. It's the secret sauce of time and prior success, I suppose.
Well, it's. I was going to say the last thing is you think about it, there's very few wealthy people in the New World, United States, Canada, that sort of thing, that have been around 200 years or 300 years. Some names like Rockefeller come to mind, and that's only 100 years. I think it was, sort of thing. So when you have these families that have maintained wealth 200 years, 300 years, really. It's interesting going oh, you've managed to maintain your wealth over centuries. Where are you investing? Interesting. And so if you're an investor in the US and you're going okay, I've made money in the last 30 years and I'd like my family to be wealthy in 200 years. What are those? It's sometimes, what's the time frame you're doing? Are you thinking in terms of getting wealth to your kids? Or are you thinking, getting wealth to your grandkids? Or are you thinking of how do I get wealth to my great grandkids?
Where's the generation? Where's the generational wealth opportunity, as well as what's the legacy you can really build?
Totally.
We would love to go back I personally would love to go back those 300 years and get in the minds of what were you thinking and how did you what's the case study on this? How did you plan for this?
Remember when the natives sold the Manhattan to whoever it was for $1? Instead of selling it for $1, imagine they'd done a lease for 10 cents a year for 10 years and they still owned it, all of Manhattan.
Yeah. You're absolutely right.
There's the example. Right? Yeah,
you're absolutely right. Yep. So let's learn that now and get smarter and grow. Well, thank you, Ross. I know you've got to run on. I really appreciate you joining us, giving not only our listeners the opportunity to hear about ground leases and your perspective, but also those knowledge and that success history you have with Globalvestment Capital Partners and all of your investors. Thank you very much for joining us, Ross, and travel safely. Enjoy your time in Madrid.
Thanks for having me on, Anessa. Have a great day. Cheers, everybody.
Thanks for listening to this episode of the Ground Lease Capital Show. If you enjoyed what you heard today, make sure to like and follow on your preferred channel. And if you know a friend or colleague that could benefit from hearing this conversation, please share it with them. I'll see you next time.